Welcome to Uncaged. Today we're speaking with Mitja Sadar. Mitja is based in Frankfurt to talk about finance and all of quite a few areas around finance, venture debt, startup finance. Mitja is the Chief Financial Officer of Enter, and he is really a champion and a leader in the corporate finance space, and certainly played a key role for entrepreneurs as they navigate the lovely world of finance. But before we get into the world of Enter and what Mitja and the team are working on right now, tell us a little bit about you, Mitja, and your background.
Yeah, thanks, Brent, and thanks for the nice intro. For me, if I think about who I am, what's my background, I always like to say I'm banker by training, entrepreneur by passion, and I love sales. So it's a really nice, interesting combo. And if you look at it in terms of my career progression, I started during the last big crisis at the Royal Bank of Scotland. Got 4 years of pure banking training, doing everything from the classical plain vanilla guarantees and and lines of credits, all the way to structured debt, structured equity, ECM deals, M&A, etc. And after that, I decided, okay, what do I want to do? I want to explore the world of boutiques. I did a year in an M&A consultancy in Germany, in Wiesbaden. And then I discovered the startup world, and like they say, the rest is history. I spent 3.5 years at Creditech, which was at that time one of the top micro lender in actually almost globally. And we were quite successful in terms of putting the debt facilities in place, where we raised over $200 million dollars of debt, as well as over 200 million of equity to grow the business. And yeah, after that station, I wasn't unsure. I wasn't really sure if I want to be a banker or if I want to be a startup guy. I was somewhere in the middle. I love doing amazing deals, and yeah, I was walking the fine line. I joined the bank for a year, but figured out pretty quickly, nah, I'm a startup guy. I love building. I love being the principal there, not the agent per se. In a sense that in a bank you do more deals. You might be do larger deals, but you're an agent in all of them. It doesn't matter if a deal collapses. Yeah, you're gonna get less bonus, but I mean, you're gonna be fine. And if you're on a startup, what you do really does make a difference, in a sense that if the deal doesn't happen, there's not going to be another deal. There's not going to be a startup happening. So you better make sure you do it and that the deal happens. And that's actually what's driving me. What's like, I love building stuff. I love creating them, and being able to structure those deals, those transactions. It's what was driving me. What was pushing me through the 5 years at Grower, where we raised over $1 billion on the debt side, and yeah, I mean, at the same time, being able to structure debt and to monitor and to prepare the covenants forces you to actually go broader into finance. You need to know accounting, you need to know BI, you need to work with controlling, you need to work with treasury for the liquidity management, etc. And as such, you get to know all the areas. And obviously, if the push comes to a shove, you're the best place for or the best person for a crisis manager in any of those areas. And that's how you collect experience. And that experience culminates eventually in a CFO position, where you basically pull everything together, for both from the side of so to speak, the traditional finance, accounting, controllership, and treasury.
And that's Enter, right? Finance. That's where you are now, yeah?
And that's at Enter where I'm now, exactly, yeah.
I mean, what a great name. I love the name, Enter. So tell me a little bit about what you guys are up to at Enter.
Yeah, well, Enter is opening the door or entering into the new carbon neutral future, in a sense that we all, if you look at the houses, if you look at the housing stock, we all know that housing is first super inefficient, at the moment at least, as well as also causing one of the most CO2 emissions globally. And a lot of it can be fixed with relatively easy measures. For example, putting insulation in the walls, replacing the windows from a single glazing to a triple glazing, replacing the roof, making sure that you don't have too much heat leakages. In Germany, which is our core market, we estimate that for certain construction years of the houses, so for example, houses built in the 1970s, we can reduce the energy consumption by 80%. So by a
Wow.
factor of 4, just by putting those measures in place. That, of course, it doesn't all come cheap. I mean, if you need to rebuild and refresh the whole house, you're going to pay a little bit for that as well. And that's where actually also my skills from the depths or from the assets that come into play, in a sense that Enter is not just telling you what you need to do. What's our mission is that we're trying to help you actually make it happen. So we're
Mm.
going to tell you who can do that for you, what subsidies you qualify for, or tax breaks in the US. How can you pay for it? Who can finance that for you, etc. So basically, being a one-stop shop for everything that you need to do in terms of the energy efficiency of the house.
So you would basically essentially offer the solution as to what you would need to do. So this is for essentially, let's say, your average German homeowner, and they would then work also with you, or you would advise them on how they could finance that and what government tax benefits there might be for that. Is the German government quite helpful in terms of tax subsidies on this type of stuff?
Yes. So basically, what we do is first, we have a project which we call the renovation plan.
Mm-hmm.
So this is a product where you upload some documents online, and then we do one on-site visit, and then we create 50 pages document, which estimates your house, does all the measurements, tells you where all the leakages are, and also recommends which are the measures that you should do that's going to be the most cost effective. And then in the next step, we send you the offers for those measures that we recommend. That doesn't mean that you're locked on us. I mean, you can always get your own offers. It makes it easier if you get some from us, because that's it's first easier for you to compare, and
Mm-hmm.
secondly, the likelihood of you actually doing something. I mean, if we make it easy for you and you just click 3 times with the mouse, it's easier than if you need to go and find handymen that are going to do the work for you.
Yeah.
And at the same time, as part of the quote, you will also have the financing, which we do through our partner banks. And we go a step further. We don't just tell you which subsidies you get from a German government. We'll actually help you apply for this and monitor. So that's also our service that we do for customers.
Yeah.
That's that you can engage us just as an advisor for the subsidies, and we prepare all the docs for you. We help you make the filing. And of course, I mean, it's not for free, but it's definitely worthwhile, given
Yeah.
that in Germany, for certain measures, the subsidy can be up to 70% of the amount. So
Wow.
um, people got really excited about heat pumps for, let's say, for the lower income population. So there was
Mm-hmm.
a cap that everybody could get up to 50% subsidy, and if you qualified under 40,000 per year in terms of the income threshold, it was an extra 20% additional subsidy.
Wow.
And right now, the government bank basically the State Development Bank of Germany is
Mm-hmm.
preparing a product also with the view of this energy renovation, because obviously push towards net zero is very real, and I think across the political spectrum, everybody is agreed that we need to pay for it and it needs to be subsidized.
Yeah.
So the State Development Bank is preparing a subsidized product, lending product. So where you
Mm-hmm.
basically can take a loan and you pay 2.5% less than market interest rates for the duration of the loan if
Wow.
you qualify.
Wow, well, that's amazing, Mitch. It sounds spectacular, actually. And I mean, I think of the current energy marketplace that we're in, certainly in Europe. It's a really interesting and I'd say maybe a challenging moment. And so when I hear about your solution, certainly on a macro level, because we know we have global warming and we know we have all these stresses to figure out how to be more, I guess, efficient. But certainly, I would say we also have the stresses of the fact that energy costs are going through the roof. We have wars going on that are impacting that tremendously. I mean, what are you seeing right now is really the driver for customers to sign up for Enter and Enter solutions?
Well, at the moment, it's definitely fear of what's happening.
Hmm.
fear of what the future is going to be, and a desire to be a bit more independent from the grid, to basically not rely on the cheap Russian gas, as they put it,
Mm.
in a sense that that's what it used to be. Right now, it's more expensive. It's still the same gas. It's now it just comes from other parts of the world
Yeah.
through re-import, so it's just much more expensive. But at the end of the day, it's still the same. Um, but yeah, energy independence, reducing your own emissions, that's also the best way of hedging against the future cost spikes. In a sense that if I reduce, like if the price is double, um, I will have to pay more. But if I reduce
Hmm.
my consumption, I will pay less, regardless if whatever happens to prices, and
Right.
unless the prices go completely haywire. I think if we, at least in Germany as a country, reduce the consumption of the need for gas by 30-40%, we come to the level that can be comfortably supplied by, let's say, EFTA countries. So here I'm counting the UK,
Hmm.
Norway, etc. So we're much less reliant on the gas that comes from further away
Yeah, it
expensive.
sounds such like a great solution and almost like one where the pricing and the benefit, the government benefits, et cetera, almost make it kind of a no-brainer. Are the costs so high in aggregate for folks on the individual level? Or what, I mean, essentially, I'm trying to understand what is stop people for signing up for this?
I think the biggest break is the fact that somebody needs to build it.
Hmm.
And there's not enough of people if you suddenly increase the demand by 10, 20 times.
Yeah.
I mean, we all know what happens if everybody wants to have one thing, what happens to the price of it.
Yeah.
That's a little bit a factor
Mm.
that we need to monitor and keep an eye on. And the second one is also the fact that by a lot of consumers, they don't make purely economically rational decisions per se in terms of their innovation. There's also a lot of psychological factors involved.
Yeah.
Either I don't know, you have a parent who's still in the house and they don't want to change the heating to something else because they're used to have their own specific heating and they want to keep it longer,
Yeah.
and that's not an argument you want to go for. Or there is some expectation that you're going to get something within 2, 3, 4 years time, and you want to wait for that. You don't want to do now,
Yeah.
or purely just a fear in a sense that right now in Germany, we've seen the energy costs increasing a lot. A lot of people are squeezed and they're feeling it. And
Yeah.
they don't believe that they have space in the budget for a 30, 40, 50K renovation.
Right.
Which obviously, if you spread it out in financing, it comes to I don't know, a couple $100 a month, but
Yeah.
that might be too much for some.
Hmm.
But the thing is, if you offset the cost of or the savings you get through being more efficient, there are occasional products where you actually break even already, like even if you take a 10, 15 years financing
Yeah. No, I
on a
can
cash
see
flow
that.
basis.
I can
Yeah.
see that. And I see the benefit of it. And I really, really love what you're working on. And I think that this really just like one of those wonderful examples, Mitja, in your career where you've taken really kind of an excellent product. You've applied that financial thinking on it from the customer perspective as well as from the company perspective and been able to kind of bring something to life in a bigger way. Is it that type of thinking that really drives your passion for this space?
Yeah, I mean, definitely building something, creating something that hasn't been done.
Hmm.
Not always reinventing the wheels, but sometimes using the wheel and put it on a cart, or applying it in a novel way that really transformed the market. It's something that definitely like pushes me forward, and I like to be at the forefront. I like to explore, to try new things. Of course, I
Hmm.
also make mistakes. I also get burned, but I mean that's the sign that I just learned something else, and the next time I'm gonna avoid that and do it better. Which obviously that's how it should be done, because that's the only way to grow and to learn and to develop as a person and also as a leader and
Hmm.
as a businessman as well.
Yeah, well, it's just a fascinating business in general. I think, I've spent a lot of time in Germany this year, and I find that Germans are quite conscientious in terms of their thinking over the environment. They tend to be very focused on things like recycling, much better than us horrible Americans. But in terms of things like this, I would imagine the appetite would be pretty pretty good to consider this, especially right now. And so I think it's a very, very bright future for you guys with Enter. But let's talk about the future in general. I mean, I kind of want to get a sense for you and from you, not just about what you guys are working on at Enter, but just in the finance space in general right now in Germany and in Europe. What are you seeing for 2024? You know, we've all been freaking out about these lovely high interest rates that have been popping up everywhere. What are you seeing in the marketplace?
Well, actually, it's pretty interesting watching this, in a sense that, like they say, a new year, a new beginning, and this year it has literally been like that. It feels like everybody wants to say, okay, 23 was horrible, let's leave it behind. 24 should be better, and that's what you feel in the market. I mean, if you look at it,
Mm,
especially with the market or with the central bank signaling that we're pretty much close to the peak of the interest rates. Looking into the swap curves, the at least on the Euribor, 2-3 year swaps are trading below where they were last year, or in December's. So we definitely see an improvement in the sentiment. I mean,
The European situation is quite interesting because there's a real need to drive growth, you know, across the region. And so having these really high interest rates, it's tough, right? So I imagine that Lagarde and a team are trying to figure out how to balance this stuff, right?
Yeah, I think everybody's trying to figure it out. I mean,
Mm.
on one hand, you cannot have a runaway inflation. On the other hand, you don't want to kill growth, and even worse, if you increase interest rates too much, you start shaking the big economies that are over-levered. For example, countries like Italy,
Yeah,
countries like Spain, countries like Greece. Obviously, Greece is the size that can easily be saved. Looking at Italy, it's not so easy anymore.
not so easy. Yeah.
So that's why it's a very interesting balancing act that they're doing. And I mean, so far, true, hasn't been the most pleasant, but they've also not done too many mistakes.
Are you optimistic right now for the way the year is going to evolve, or what's your take on the situation?
It's kind of hard to say. I
Mm.
would say I'm always an optimist by nature. I mean, that's what you need to be if you want to grow on amazing things. But I would say there will be most likely a recession,
Hmm.
probably not too deep one. But if you have a great business model, and or people who are not over levered and not
Hmm.
overextended, they should be doing relatively well. And I mean, of course, there will
And
be
what are
at the
you
margins a little bit
finding
of
right
pain.
now in the startup world from a financial perspective? Are things slowing down a bit there, or what's the atmosphere?
So in the startup world, you have a couple of big reckonings coming up, in a sense that anybody who was halfway prudent was keeping 12 to 18 months of liquidity
Mm,
in the banks. So when the music stopped in 22, everybody started extending the runway, slowing down burn, etc. And those who didn't manage to turn around fully into profitability are right now slowly at the stage where they need to raise something.
mm,
So there were some, of course, emergency cases back in 23 that we've seen with a hugely dropping valuations. There will be some reckonings also this year,
mm.
when the companies, because you know, after 2 years of belt tightening, if you haven't managed to turn profitability, it's going to be tough achieving it in the next 2 years.
Yeah,
In a sense that, like, there are certain costs you can squeeze out of the business, but the rest in unit economics needs to be profitable for it to work.
yeah,
And if the model doesn't have that, um, we might see a couple of shotgun marriages and a couple of collapses from the bigger players,
yeah,
and especially those that are burning cash still. But
absolutely.
we'll see. In general, such times are the best to start a company,
Mm,
because there's a lot of talent that's being freed up. I mean, if you look at it, like you read about layoffs pretty much every day.
yeah.
But what the layoff means is that if you're starting your own business, you have suddenly a lot of great engineers available,
Hmm.
and you don't need to beat. They don't go to the highest bidder. they go to
Hmm.
the one with the most promising model, and there you have a chance. And if you look at it, a lot of great tech companies were started over the last crisis,
Yeah.
or at least like every crisis is a shakeout that frees up the resources and enables the great ones to prosper. And in that sense, it's good to have this every couple of years.
Yeah.
Of course, not if you're the one who gets shaken out, but for the ecosystem in general,
Yeah.
having a little bit of correction is good.
Well, I like how you framed it, Mitja, where you said that, people will go to the best ideas. So hopefully that's true and the talent will chase those things and make them come to fruition. And that Enter and companies like yours that are doing some amazing things continue to prosper and grow. We've been speaking with Mitja Sadar. He's the Chief Financial Officer at Enter. We've been talking to him about primarily the European financial sector, also really kind of what's facing startups and entrepreneurs as they come out into the marketplace and look to grow their businesses. Mitch, if someone wanted to learn more about you and talk finance and also what you're working on at Enter, where's the best place to reach you?
Definitely LinkedIn. I'm the only one with my name combination, so you can find me quickly in LinkedIn. Just send an invite, and happy to chat. Happy to see how we can work together, how I can help you.
Well, Mitja, it's been amazing chatting with you. I really love what you and the team are working on at Enter. I think I look at all of the properties in the US that need your services. So hopefully you guys dramatically expand globally quickly so we can all take advantage of it over in the States as well.
Yeah, give us
We've
a
been
couple of years,
speaking.
and we'll come over.